bit if that's okay.
Sorry.
All right, welcome everyone. My name is David Lipkis, and as you can see by the slide here, I'm the insurance guy for dentists. A little bit about me. I actually grew up in Halifax. I lived on Beat Street between Quimpool Road and Jubilee. I graduated from the Dalhousie Commerce Program. Um, and I have been in the insurance business for about 12 years now. I'm an insurance broker, which means that I work with all the insurance companies, and my job is to get my clients the best rates, give them all the information they need to make the best decision for themselves, because it's not my plan, I'm not paying for it. And I have ended up specializing in dentists, but I do work with anybody. And how I got into that is my father-in-law is an oral surgeon named Dr. Larry Gom, and he does oral surgery seminars for general dentists in Ontario, in and Alberta. And when I got into the business, I began to be a sponsor at his events, and I would, meet 50 dentists at a time over 3 days and got to know them, and they just sort of become my clients. I do life insurance, critical illness insurance, disability insurance. Um, and I know that you guys are students, so you really don't have any need for almost anything here. But that's not really the point, right? The point right now is to give you guys an idea of what's coming ahead, what's coming down the pipe. But I do want to tell you this. One of the nicest things that I get to do is I get to meet young people or dentists before they even begin their careers. So when they're students and when they're pulling their hair out and they're going crazy and they're stressed and they have no money and they, and I get to see them then 3 or 4 years later where they are making a ton of money and you are paying a ton of taxes and you'll need someone to help you be efficient in where your money goes and where it doesn't go. So these things on the slide here will be more important later on, but it's really you don't need to know much about this right now at all. I will tell you a little bit about CDSPI and how that all fits in with everything, and then I'll get to the other stuff. But I will say this: if you are a dentistry student right now, and if you do not have disability insurance right now, it's probably best to wait until you graduate. Okay. So I would say have the CDSPI coverage because it's free. I would tell my kids to do the exact same thing. And then when you graduate, if you don't already have a plan, let me know or an advisor because RBC will, and they're the best disability insurance provider now for dentists. RBC, in your first year of practice, they'll give you 5 months free upfront. And because you're a student now, if you were to purchase a policy, you couldn't get much. And there's been a lot of changes the last 4 or 5 years. So if you have a policy, you're great. If you don't have one yet, don't get one now. Wait until you're in your first year and you'll get a much better deal with all that type of stuff. Um, the difference between what I do and what CDSPI offers, okay? Whenever you work with someone like me, a broker, we put you in touch with the insurance company. So we connect you guys, okay? So you have a contract with the insurance company, and it's a one-to-one contract where you pay a premium and they provide a service, and no one, and they cannot change the policy on you, okay? They cannot all of a sudden increase the price. They cannot take anything out of the policy. They can't say, oh, you know what, we're no longer going to cover you for mental illness. Like they can't change anything in the policy. Okay. You have all the power. Okay. With CDSPI, CDSPI is the client. The insurance company cannot change the policy on CDSPI, but CDSPI can change their plan whenever they want. Okay. So when you have CDSPI, you don't actually have a disability insurance policy. You have access to somebody else's plan. But they can change that plan at any time, and then that's your plan. Like they could say, we're no longer covering glaucoma. That's your plan. Like you can't, that you have no control over it. So it's more of a group plan, but it's perfect for students. It doesn't cost anything. It is coverage. But when you graduate, you will want to have guaranteed coverage that cannot change at all. And you guys are really young. So, CDSPI has 30 or 40 years to mess with you if they really want. Okay. Before I jump into the other part of the presentation, does anybody have any questions about CDSPI or getting disability insurance now or later? Go ahead and ask me anything.
I have a question.
Yeah,
So I've heard that like the free insurance by CDSBI is actually like not to our favor because they don't do any kind of health checks and like what if we get any kind of problems later on? So like wouldn't it be better to just start off with a lower premium based on our health and then later on switch to like a more comprehensive program? So like is it really to our advantage to do the free one or like is it more
free is
a
free.
way?
Take it.
Okay.
I really, I would like, I would say take it because before there were limits about how there are now, but you could, as a student, you could have more coverage as a student than you can now if you were to get a new policy. You can only get $1,000 of coverage anyway, right? I think only in your fourth year. In your third, second and first, you might only be able to get like $500 of coverage. At least CDS probably will give you 1,000, no medical question. So if you do get hurt in school, you have something, right? But then I wouldn't really pay for it, right? The one I want you pay for it afterwards, and that's when you pick up a policy right from an insurance company. Does that make sense?
Yeah, I
Yeah,
thought it makes sense.
save your money. Honestly, save your money. Any other questions about CDSPI or anything like that? No problem. I can always come back. All right. Uh, I am on social media, so if you don't already follow me on Instagram, please do now at The Insurance Guy for Dentists. I go to a lot of CE credit events. I'm always taking pictures. You'll see what other people are doing. I work with UFT. I work with Western. I got a funny story about that. Um, I so I take out students in the IDAP program at UFT out to the CN Tower. And the IDAP program is the internationally trained dentists that come to Canada and to the Canadian schools and to get their license. And I remember I took out this group of people at the CN Tower, and when I went to Western at one of their vendor fairs, they kind of were jokingly upset because I didn't take them out to dinner. So I began to take out them dinner. So I do dinners for UFT and Western for the entry students, but always pictures and all that type of stuff. So if you don't follow me already, please do. It's cool. Okay, so let's go to what I told everyone we were going to be doing, which is, let's see if I can move this along. Okay, so this is really kind of what I wanted to show everyone. This is great for everyone to know, and so many people don't know about what this is, and this should be very helpful to you in the future. So I do all of these things, okay? And I know that, I'm even telling you not to buy any policies off me right now and don't. I hopefully that you will reach out to me in the future or let me know when you graduate and I can follow up with you afterwards. But I just want to be helpful to you guys, okay? So we're going to start over here on the left-hand side of the screen. I don't know if you can see my mouse or not, but you see where it says non-registered funds, okay? And below that it says registered funds. So non-registered funds are anything that's not in an RRSP and not in a TFSA, okay? And they can be, GICs and shares is right when you buy a part of a company. And it's difficult when you're investing because when you buy individual shares, you really want to buy different shares from different companies in different countries and different industries, to diversify your risk, okay? That's what buying shares are. And then mutual funds These are basically funds already diversified for you. So you can buy into a fund that's already diversified. There's all different types of funds, and you can choose by what by your age, right, or even what your risk tolerance is, and then you can find different funds that would be helpful to you. So you don't have to worry about that. And so mutual funds are from banks, and segregated funds, they're from an insurance company. And the only real difference between a segregated fund and a mutual fund is that the segregated fund has guarantees where the investments can't go down to a certain level. But that's all future, future, future. Don't even worry about that, okay? But with non-registered investments, when you make money, you realize the gain, you need to pay taxes. Okay, so the government always gets the money. So if you make anything, you got to pay in tax. Pay, take, pay, take, pay, take. Okay. And then you have registered funds. Okay. So the RRSP is the Registered Retirement Savings Plan. So it's going to get more interesting. Bear with me. But the Canadian government does not want to look after you when you are older. Okay, they can, they will, but they don't want to, right? And you don't even want them to because the care isn't great, right? We're talking like, you know, uh, when you're older, being in a big room with other people, like no privacy, like they will house you, but you don't really want it. So they want to incentivize you to prepare and invest and save for your own retirement. So they have the Registered Retirement Savings Plan, where any funds that are in the plan, they will, when they grow, you're not taxed on the growth. So your investments grow tax free. Okay. And what's interesting about RRSPs is if you look here in the first line, when you put money in an RRSP, the government incentivizes you also by giving you a tax reduction. So let's say you made $100,000 in a year and you didn't put any money in RRSPs, then you'd be taxed on $100,000. But let's say you made $100,000, but you put $20,000 in your RRSP, then the government would only tax you on 80,000. So that 20, you can actually use, you know, contribution to RRSPs to even get under, income tax rates or bands. So they reduce your taxes and it grows tax free. Okay, so if you look down here, so RSP tax reduction, so you reduce your taxes. Tax deferred growth, so it grows and it's not taxed. And when you take the money out, the other check mark, you will pay. So you do pay taxes when you take the money out. Okay, so when you know, because you're promising the government that whatever money you put in here, you are not going to take out, then they give you, all of these benefits. But sometimes stuff happens. And that's why they started with the TFSAs, right? Because you could take the money out of your RRSP earlier than age 65, but if you did, they would punish you, right? They would really make it so painful that you really wouldn't do it unless you had to do it. And some people have to do it. So they then started with this program called the tax-free savings account. So that RRSP saves for your retirement, and then the tax-free savings account is another tax shelter. Okay. Now, with it, you'll see where it says tax reduction, there's an X. So when you put money in the TFSA, you do not get a tax reduction. Okay. It does not affect your taxes at all. It does also have tax deferred growth. So any money growing in the tax-free savings account grows tax-free. And then you'll see you're not taxed on the withdrawal. So you can take the money out of the TFSA and not pay any taxes. So the TFSA is how you save for something. So how you put money in a TFSA to save for a down payment on a house. You put the money in, it grows tax free. You can take it out to buy the house. You're not taxed. Okay. And then there's something called whole life insurance. And that's a not a well-known other tax shelter, which I'll get to in a moment. But because a whole life is an insurance policy. And so, continuing on, there's no tax deduction for a whole life insurance. It does grow money tax free. And then tax on withdrawal, yes and no, depending on how it's done. Okay, and we'll get to all that later. Um, Before I move on, is there any questions from anyone on this side that we just talked about quickly? All right, I'll take it as a no. If you do think of anything, please let me know. So this is the investing side, okay? And then over here on the right-hand side, you have the insurance side, okay? So the first thing I'm going to talk about briefly is living benefits. So what goes under the umbrella of living benefits is disability insurance and critical illness insurance, okay? And so how this works is with disability insurance, it pays you a monthly income if you get hurt or sick. So any accident, any illness, if your income goes down by more than 20%, the insurance company would give you monthly income relief payments until you're able to go back to work. And if you're not able to go back to work, they'll pay you this money every month and guaranteed until you're 65 years old. Okay? To now, when you are when you are graduated and you're practicing dentist, the amount of disability benefit you're allowed to have is dependent on what your income was last year. Okay? Because you're not allowed to make as much or more on disability than you would if you're working, right? If you made $50,000 a year working, but you made $100,000 a year being disabled, like nobody's going to work. Okay. And so the disability insurance, monthly income, it pays your rent, your groceries, your phone, your car, like your day-to-day living expenses. Okay. Um, and again, all the way up to age 65. And disability, of all the insurances that I do, disability insurance is the most important one to have. It pays you for the most things, accident, illness, it pays you the longest, and dentists make a lot of claims. Okay, so this is extremely important. And it's extremely difficult to get. It's harder to get than critical illness insurance, harder to get than life insurance. So they really look at everything when it comes to disability insurance. So the sooner you can get a plan from the insurance company, I know I said don't get it, as soon as you graduate if you don't have one. Okay. And then I'm going to talk about critical illness insurance. So critical illness insurance only covers critical illnesses, right? And it's like 25 or 26 of the worst ones, like heart attack, stroke, cancer, MS, like brutal. Okay. If you are diagnosed with a critical illness, then it provides you a lump sum all at once. Okay. It's not like you have to submit receipts. If you say, I want, God forbid, I get a critical illness, I want to be paid $300,000. If you get it, boom, 300,000. Now it's not going to cover skin cancer, right? That's going to be serious, right? But it's a lump sum tax free all at once. The coverage can go up to age 100 and it covers about 25 or 26 diseases. Now, one of the nice things, I didn't put it here, one of the really nice things about critical illness insurance is if you don't make any claims, you get back all your money. Okay? So you might have a plan that pays you $300,000, God forbid, if you get diagnosed with a critical illness. But if you go to age 75 and nothing happens and the policy expires, they will give you back everything you paid. So you might get a check for $200,000 if you don't get a critical illness. So it's almost like a win-win. Okay? Um, any questions? Oh, and here's how they both work together. It's not one or the other. Okay. So I know you guys are really young. Hopefully, you all know who Bob Marley is. Okay. I'm gonna tell you, I don't know how many of you know how Bob Marley died. Okay. But Bob Marley died because he had cancer on his toe. Okay. So, and he wouldn't get operated on and he eventually died, but it was a very aggressive form of cancer. But let's just say you had this big black spot on your toe and you go to the doctor and he or she's like, "Oh my God, you have toe cancer." And if it's a critical illness, they're going to give you whatever amount, $300,000 or five, whatever it is, and you're going to take that money and you're going to you're not going to go to work the next day. Okay. You are going to find out where the toe cancer specialist is on Earth. It could be in Japan, it could be in California, it could be Venezuela. You're going to go wherever you need to go to save your life. It's going to pay for flights, medicine, x-rays, care that you can't get here. And you may not be able to have hundreds of thousands of dollars in your bank ready to go for you to be flying all over the world to save your life. So this is what critical illness does. Okay. So let's say this happened, and now because it's on your toe, it's starting to become very painful. Okay. And now you're not actually able to go to work anymore. And that's when the disability benefit will kick in. So if you can't go to work because of an accident or illness, you get the monthly benefit to pay your groceries, your mortgage, and your food and all that type of stuff. Okay. Uh, any questions on that so far, on anything I've talked about so far? Bueller? Anything? Okay, no worries. Um, and then there's term life. So then we're coming to the life insurance aspect, okay? There's two types of life insurance. There's term life insurance, and then there's whole life insurance. So term life insurance is insurance for a set period of time, 10 years, 20 years, age 65. And for the most part, the insurance companies really don't anticipate anybody dying when they have a term life insurance policy, right? Because most people get up in their 30s or 40s, and the chance of someone dying in 10 or 20 years is ridiculously low. So, in the premium that you pay, they don't even anticipate actually paying any money out. Okay. 99% of the time, what happens is you don't die and the insurance company keeps the money. Okay. But it's good because it allows us to get inexpensive coverage. Think of term life insurance as like renting an apartment, right? Or like you live there, you get, four walls, you get privacy, and then when you leave, right, you don't get anything, but the apartment has served its purpose, and then you move on to something else. Okay? Um, Whole life insurance is insurance that lasts your entire life. Okay? And what happens is, and see this little Venn diagram here, is it's part insurance and it's part investment. Okay, because how this works is if you live to be 140, it'll keep going, and the cash value in the policy will grow, and the death benefit will grow. But what happens is, with whole life insurance policies, the insurance companies allow you to deposit more money into the insurance policy than what the actual cost of the insurance policy is. And anything over and above the cost of insurance lands in the policy as a cash value, okay, and then is invested, okay. And then what happens, so there's two types. I'm not going to get into both types, but the participating type of whole life insurance is the insurance company pools together all the other cash values from all the other policies, and they invest it for you, and you become a partner with the insurance companies. And insurance companies are amazing at not losing money and making money. They're like banks, they always win. Okay. So you become a partner with the insurance company. And then when they make money, they share the profits back with you as a tax-free benefit back into the policy as a cash value that then is invested again. Okay. And these whole life insurance policies are great later on. Like there's going to be a time, I know it's hard to believe this, okay? You guys are going to make so much money that you are going to need to incorporate. Okay, so you'll go from paying over 50% tax and you will incorporate and you'll be paying 15% tax into your corporation. And then when you want to get the money out, you dividend the money out of the corporation into your pocket. But I'm not going to get the whole thing, but eventually there's going to be a lot of cash sitting stagnant in your professional corporation, not doing anything because it costs money to get it out. But you can use a whole life insurance policy to get the money out of your corporation tax free, grow it tax free, and then you can access the money tax free as a tax free income stream in retirement. But I'm not going to get into that. That's a whole other discussion. But that's the general overall knowledge I just wanted to share with students about, life insurance, disability insurance, critical illness, and all these types of things. Any questions, comments, thank yous, anything? Did you guys know all this before? Is this new?
Oh no, I'm just happy to listen. Like it's good. Like it's not that we haven't heard it before, but I feel like you're explaining it really well, so I'm just happy to listen and just taking it all in.
And I think sometimes like it's almost to the point, and you're right, like everyone's heard of these things, and you're almost embarrassed to ask a question about it because maybe you think you shouldn't, but so many people don't know all of how it all fits together. You know what I mean? And this could really just sort of just help you save money and make less mistakes, right? Um, yeah, I don't know if any other questions. If you have any questions, please shout them out. I'm happy to answer anything.
Hi, David. Thank you again for the presentation. What would you say are like some common mistakes or something that you see like dental students making when it comes to like getting their first insurance once they graduate
Sorry,
or oh, sorry,
say that again.
can you hear me?
Yeah, yeah, I can. Sorry.
I was just wondering like what are some common mistakes that you see a lot of dentistry students make when they graduate as far as like setting up their first insurance policies and stuff like that are
The biggest mistake I see is uh, people getting talked into buying these whole life insurance policies way too early because they are very expensive and it sounds super interesting, right? But these policies are a commitment, right? You have to be willing to put down, you know, this money, thousands of dollars could be every month, right? Or $20,000 a year for the next 20 years. And some people they get, sucked into that. I would also say, and it's not quite your question, I think people rush to buy a practice too early. I would say, and this is it's not insurance talk. I'm gonna put my dad hat on. Okay, um, when you when dentists move to Toronto and work in Toronto, there's so much competition that the people that have clinics in Toronto, they set so many conditions. They only give them they don't give new dentists good work to do. It's all the crappy work they don't want to do. Okay? But if you go to a rural practice, rural Nova Scotia, rural Alberta, Newfoundland, right? Rural Ontario, you will you will see all different kinds of work. You'll get and you will be a much more well-rounded dentist because you'll be doing everything. And the people in these rural communities are so thankful, right? They show up for their appointments. They're so thankful, and you make a lot of bank, right? So I would say, go to a rural community, 2 or 3 years, get your experience, make some money, pay off your loans, right? And then come back to a major city and you'll be a much more well-rounded dentist, right? Or maybe you'll fall in love with these small rural communities, which are great places to raise families.
awesome. Thank you very much.
I also think that dentists incorporate too early as well. So you might have an account that tells you to incorporate, but you only need to incorporate when you have, like, when you're making over 160, $180,000 a year, and you're like, okay, I got to do something about paying half in taxes. But some accounts will try and get you to incorporate like right after you graduate, but you don't need to. There's no money to shelter. So just wait. So don't rush in buying a practice. Don't rush to incorporate. Get disability insurance. And yeah. And you can always ask me questions anytime.
Awesome. Thank you very much.
Was that helpful or?
Yeah, for sure. I had never really heard of anyone talking about incorporating too early, so that's something that's kind of new to me there.
It
But
is. I mean, yeah, I have people incorporate, they've got no money. I'm like, why are you incorporating? Well, my accountant said so. I was like, that doesn't make any sense. Yeah. Because once you incorporate, I mean, you're not making a mistake, but you're paying for something you don't need to pay for right now. Like you guys have enough. on your plate when you graduate. There's enough bills, right? You don't need to add stuff that you don't really need right now.
Does the fact that we have like a substantial amount of debt graduating, can we use that to offset like the amount of income that we have and therefore like the amount of taxes that we'd be paying, or is it doesn't really?
That's an accountant question. I'm not really sure how to answer that.
Okay.
But what I would say is also think of it this way. You guys are strange, okay? And I mean that in a good way. Don't hang up on me, okay? Because you guys are independent contractors, right? You are not an employee. There's no group plan coverage for you. There's no pension plan coverage for you, right? You need to set things up for yourself, right? So you need to get organized yourself. I'm not sure. That's interesting. Like as independent, I don't think you even realize this. There's differences with being an independent contractor. It's a lot of freedom, right? But then at the same time, there's less guardrails as well. Does that make sense?
Yes, yeah, for sure. Kind of have to adopt all the risk yourself. Okay.
You got to set things up for yourself, right? Yeah. But what's nice is like you can't get fired. As a sales guy, I can get fired. Well, not now, but before I get fired and then I got to find a new job and I got to start from the bottom and work myself up again. Dentist be like, I don't like it here. I'm going to go over here or I'm going to go over here. You don't lose anything. Just don't get arrested or lose your license. Was this talk helpful? Was this um a benefit to you guys?
I'm talking all the time, but yeah, like definitely it was so helpful. Exactly like I said before, I'd heard all this information, but like the way you're explaining it really p brings it together well
Yeah,
and
I'm glad.
puts
Like
it more
it's
into perspective.
absolutely because you could make mistakes if I mean I see people and they got these whole life policies and they're being strangled, right? Because it's too late now. If they stop the payments, it's a disaster. But they're just like can't do this. I got to do that. I'm just like, oh man, my buddy, he does insurance and he want me to do this, and I was like, okay, well, but yeah. Are any Are there any fourth years that do not have any insurance on the call? If so, please let me know and I will follow up with you after you graduate and we can look into getting you some RBC. Now, there's two good disability insurance providers left, Canada Life and RBC. Okay. They're both exactly the same coverage, same plan, same guarantees, same underwriting. Everything's exactly the same, except at the moment, and things do change. RBC is less expensive, and in your first 6 months of practice, they will give you 5 months free, which usually is nice. And when you have the disability insurance policies, you are starting out with a lower amount, but you're able to add more coverage later without being asked any medical questions because you would answer all the medical questions and give all the medical evidence on the original application. Even if it's 15 years later, they cannot ask you any medical questions. The only thing they can ask you is, are you currently disabled and receiving benefits? Because if you are, you're not getting any more. The jig is up. Okay.
That's awesome. For the RBC policy, do you need to be like a pre-existing client of RBCs, or is that open to anyone?
Oh, if you have the money, they will take you.
Okay. Okay.
Yeah. And what's interesting is like you can like and I maybe I'm answering questions you didn't even ask. You cannot go directly to RBC and get a disability insurance. They don't want to talk to you. They don't even want to talk to me. Like I have a buffer between me and the insurance company called an MGA. So there's so many people like you have to go through a broker, and they don't even like talking to brokers so much. So it's if there's a huge company, and same with Canada Life. So you have to go through the broker system. And here's the other thing, and this is one of the things I liked about insurance is Everybody has the same pricing. It's not if someone who works for RBC can get a better deal than me. Every single person, every broker provides the exact same price. It's not like I can say, okay, if you guys put in this application by the end of the month, I can knock off 10. It doesn't work like that. It's all based on how old you are, how much you get. That's it. There's now they can be structured differently and things taken out or things added in, but generally every broker has the exact same pricing. I can't get any better, any worse than anyone else. And you really want to find someone like these are long relationships, right? Like you're gonna want someone who knows, all right, I bought a practice, I gotta call Dave, right? Or I bought a house, I just got married and I got kids and I got all the like you it's a relationship where there always seem to be changing in your life. And you're going to want someone who kind of has your best interest kind of at heart because you'll be meeting him and talking and maybe even meeting your family and your spouse and your children, right? Like you have to like the person that you're dealing with. It's not like you're buying a phone and you're gone. Like it's a relationship. And what's nice is you can fire us easily. If you bought a policy from someone and you don't like them, all you do is you have a form that you submit to the insurance company saying, I don't like this guy anymore. I want this girl or whatever. Like, and you're changing the agent of record on file. That's it. The policy doesn't change. It's just the only thing that changes is who can make requests on your behalf. So if you don't like your advisor and my clients think you can easily get rid of them and have somebody else. Hint, hint, hint. I'm just kidding. Any other questions? Should we call it a day? I'm happy to keep going, but I don't want to keep you on the phone if there's not much else required.
I was just wondering, like, are there like any books or resources that you recommend for us to like learn more in general about money, insurance, like these policies? Because as like dental students, we could barely get any education about money matters. And I mean, personally, I've been relying mostly on OSAP and like just paying taxes. So it's like, oh, what are all these different things like about money? So are there any
I
books
would,
for that kind of stuff?
I don't even know. I would say, like the nice thing is, like insurance doesn't change much, and people actually count on it not changing. I would say, honestly, focus on your studies. Like you don't have to worry about anything until you're a dentist, and then like it's not that crazy, right? Like focus on your studies, and I mean, it's simple. You get disability insurance first. If you are buying a practice or having a family, you get some term life insurance. And then if everything's okay and you want critical illness, you get critical illness insurance. And then, I would say, so think of it this way. Even though disability insurance is really not sexy at all, okay, but what it does is it protects your investments. Okay, so let's say you had a plan that paid you $6,000 a month if you became completely disabled, let's say, okay? And let's say you did get hurt and now you have $6,000 a month coming in and you can pay your mortgage, right? And you can pitch in for groceries and it's all okay. And so you can keep the house and all your investments, okay? And then let's say that you decided not to have a disability insurance policy and something happened and you no longer had $6,000 a month coming in tax free. The banks don't care. They don't care what happened to you. They want the money. If you're spending money on your visa, they want the money. If you need growth, they want the money. And so you will have to, if you don't have money coming in from somewhere, and you mean your family can only help so much, you will take money out of your house. You will take money out of your RSP, out of your TFA. You will basically suck every investment dry. Okay? Disability insurance is think of it as almost investment protection so that your investments can keep growing. You don't have to You don't have to, steal from yourself. Does that make sense?
Yeah, that makes a lot of sense.
And so before you even get into investing, right? You will need to have your insurances taken care of. And then once you know what you have left over after the disability insurance, after your life insurance, and even after maybe your critical isn't all that important. I'm going to be honest. It's more disability, life. Some people are really into it, critical illness insurance. But it's after, definitely disability and term life insurance, maybe even critical. After that, then you figure out where you want to invest and play with your money. But you got to have the insurances taken care of first. That's, I think, the other problem. People get so into investments and and they don't put money in insurance. And then, because everyone talks about, oh, I made this, I made that. No one talks about how much disability insurance they have. But if something happens to you, disability insurance is fascinating. Fascinating. And if you don't have it, it's devastating. Because not only are you not bringing in money, you're now a cost. It's like a double negative. You're not bringing in 20 grand a month. Now you can now cost 6 grand a month. You know, get your insurances first. And when you're young and lock it in and early. If you guys want to reach out to me afterwards, my phone number is 647 That's 647-406-0597. Probably best to text me. And then I'll reach out. I get a lot of, if I don't know the number, I get a lot of, you know, people trying to sell me things like that aren't real. When I see a spam call, so I don't pick up a number unless if I don't know it. But text me and I'll get back to you, or send me a message on Instagram again at the insurance guy for dentists. And I love this stuff. Like, um, it's it's nice to have a job that doesn't even feel like a job. Like I love doing this stuff. I like being helpful.
Yeah, thank you so much, David. Like honestly, I learned so much and like you gave me so much more perspective as to like what to be looking for and like what things are there to protect and thank you so much again for your time. And I'm definitely going to be reaching out to you after this because I have a lot of questions still.
Yeah, I'm
But
I'm curious
maybe
to
I'll just
know what we talked about. If I'm happy just to put you at ease too. Like maybe I'm wrong, but it just seemed a little strange.
I just probably am not remembering the details correctly, but I'll definitely reach out to you. Yeah. So and I'll share your contact information in the group chats again in case anyone else wants to reach out. And yeah, thank you so much.
Oh, there's one other thing. There's one other thing. Sometimes people ask me this question: Can I get one policy that covers life, disability, and critical illness insurance? Okay, great idea, right? The answer is yes, but no. Okay, there are, like, when you get insurance, you want to have one for life insurance, one for disability, one for critical illness, because there is a policy, I think it's from Manulife, that offers all three in one policy, but it's not life insurance and disability insurance and critical illness insurance. It's life insurance or disability insurance or critical illness insurance. So basically, if you make a critical illness insurance claim, there's no money for anything else. It's all the money comes from the same pool. If you make a disability insurance claim, there's no critical illness, there's no life insurance. It's like one, whatever hits first is what you get. You really want to have one of each. Does that make sense?
Yeah, that does make sense. Like there's only like one
There's
pile
only
of
so
money that they
much.
pick from. Yeah.
Exactly. It's like one pool, it all comes from the same pool.
Yeah.
If,
I'm
go ahead.
just I'm just gonna stop recording for now, but like